Bitcoin is not just drifting below a round number. It is sending a liquidity warning before the US market opens. The headline is Bitcoin under pressure, but the deeper story is ETF money leaving the system, Wall Street cutting expectations, and risk appetite becoming more selective. When Bitcoin starts acting this week, while investors are already watching yields, the Fed, and stock futures, the message is bigger than crypto. The key signal is not one red candle. US spot Bitcoin ETFs just went through their worst month since launch, and that matters because ETFs were supposed to be the institutional bridge into Bitcoin. Instead, that bridge is showing redemptions, and Bitcoin is trading around one of its weakest zones in a long time. A major Wall Street bank also cut its Bitcoin and Ether forecasts, not because the technology disappeared, but because the flow picture changed. That is why this story matters to American investors before the open. Stock futures are already soft. Treasury yields are elevated, and the market is waiting for more signals from the Fed and fresh economic data. In that environment, Bitcoin becomes a very clean risk sentiment gauge. It often moves before the broader market admits that liquidity is getting tighter. The mistake is to read this as a simple "Bitcoin is dead" story. That is too emotional, and it misses the real structure underneath. The real issue is that capital is rotating toward assets with stronger narratives, especially AI and large-cap growth, while crypto is losing the automatic institutional bid that supported it before. Price is what everyone sees first, but flows are what explain why the bounce keeps struggling. For the calm metrics, the takeaway is simple. Do not watch the noise. Watch the liquidity. Bitcoin is not predicting every move in stocks, and it is not giving anyone a guaranteed signal. But it is warning that the market is no longer rewarding risk blindly. If ETF demand keeps fading while yields stay firm and Wall Street waits for the Fed, then Bitcoin's weakness is not just a crypto headline. It is a morning warning from the most speculative corner of the market.